All right. Well, good morning, everyone. We are going to get started with today's agent development training. For those of you who were on spring break last week, like I was, hope you had a great trip. Came back okay. I know Cav did a great job last week. I got a lot of great feedback on last week's session. So, Cav, appreciate you, continuing to pour into the agents that are a part of our organization here. Couple of quick things I just wanted to announce and update you on before we get into talking specifically about our life insurance portfolio. Um, First of all, I just came off of a TVP call that was specifically focused on technology and technology rollouts, and it was awesome. Super excited. I don't have any big reveal today, but I would say in the next 7 to 10 days, we're going to have a big reveal on who our new CRM vendor is. We are going to be transitioning, hopefully through the summer months, to a new vendor, greatly enhanced capabilities. The organization that we're actually partnering with, we finalized all the paperwork and contracts. We've been working with them for several months to kind of build the infrastructure for this. And, it's going to incorporate a lot of cool additional resources that we just haven't historically had at our fingertips. So we'll be announcing that. We'll be doing rollouts. For those of you who are going to Austin for our celebration in June, you'll get a lot more information there. And then June, July, August, we'll be working hard, to roll out that particular platform. Kind of in conjunction with that, we're also internally working on an artificial intelligence platform, AI. That's kind of the new buzzword today, I think, and a lot of people are leveraging AI in a variety of ways. We're starting small. We're using the resource center and using an AI system to basically learn what's in the resource center so that our field support staff members can quickly get answers to agents on any number of topics. And then we're going to, continue to expand that, and hopefully, before this next open enrollment, we'll be able to expand this AI tool to all agents in the enterprise so that you can simply ask questions and get answers that are, curated specifically out of the content that we have within our ecosystem. So super excited about some of these technology pieces. There's a lot more going on behind the scenes. If you're a sub agent or a sponsoring agent who has sub agents working for you, a lot of enhanced capabilities there, upgrades to the resource center, upgrades to the agent marketing websites. There's just a lot on the horizon. We are truly, a couple of our leaders announced this 2 years ago, that we're building towards the agency of the future and building this agency of the future model out. And a lot of that is going to be driven by technology, behind the scenes. So more to come on that is really exciting stuff. I did want to remind you guys of a couple of trainings we have scheduled. One I have scheduled for this afternoon at 3 p.m. I've sent everybody the link for that. It is specifically a training around ICHRA, Individual Coverage Health Reimbursement Arrangements, which are a vehicle that small businesses or large businesses can use to deliver benefits to their employees in maybe a uniquely different way than just offering traditional group insurance. And so we're going to have Michelle Drummond from BASE coming in, and I'm going to be doing part of the presentation as well, just kind of walking through what this looks like. One of the big things I want to do this afternoon is I want to tell you all how I approach a small business owner who's looking and asking questions about the differences between individual coverage health reimbursement arrangements and traditional group insurance. So we're going to start today with that. And then in the next week or two, we're going to bring in, I was hoping to bring her in today, but she had a last minute emergency. We're going to bring in Mary Margaret from Savvy, who's another HRA vendor that we have, and do some additional training with her. So there's going to be a couple of sessions here over the next 2 to 3 weeks where you guys will have an opportunity to learn more about the individual coverage health reimbursement arrangements, and then leverage that knowledge to go out and engage with small business America, right? That's really why a lot of you want this intel, is so that you can become a subject matter expert when you're walking into a small business, really understanding the solutions that are in your portfolio. So don't miss that training this afternoon at 3 o'clock. I've got it scheduled from 3 to 4:30. I don't know if we'll take the full 90 minutes or not, but I'm happy to. I've got that amount of time scheduled. And then last but not least, we have a corporate life insurance training that is scheduled for tomorrow. I think that's at noon time, noon Eastern time. And I'd encourage everybody to jump on that. Life insurance is going to be a much bigger focus for our territory. Part of it is because of, and I put it in the email this morning about our agent development training, we are running behind as far as our life insurance sales year to date as compared to the first 15 weeks of last year. And we want to try to make up some ground on that. It's not going to take much to make up the ground that we need to, but life insurance should be a part of the solution that we're offering to every single client that we engage with. We should at least be asking the questions. And we're going to spend the rest of the day today talking specifically about life insurance. Steve's going to help me. I'm looking to see. Cav, you're here, right? Oh, there he is. He's in a different part of his house today, it looks like, or he's not at the office, is what it is. I think he's got some construction going on. So we'll manage the hammers and saws in the background with Cav today. But I wanted to just kind of start off and talk a little bit high level about life insurance and our life insurance portfolio. And then Cav's going to help me dive a little bit deeper into some of the products that we think you should understand or at least have knowledge of so that, you know, they're a tool that's in your tool belt. So starting off very high level, I think it is important for those of you who may not have been involved in life insurance ever previously. When we're talking to clients, we really need to make sure that they understand that there are two basic types of life insurance that are actually, sorry, I get pop-ups coming up here. There are two different types of life insurance that a consumer can consider. There's term life insurance and there's permanent life insurance. And I would say just about every product that we're going to talk about this week and next week and in the coming weeks falls into one of those two categories. It's either a term product or it's a permanent product. And the big differences between those two types of life insurance products is that term insurance is built to fill a need for a specified time frame. So when you buy a term policy, you're typically buying a 10 or 15 or 20 or 25 or 30-year term policy, and you're probably locking that policy in for the length of that policy as far as the premium is concerned. So it's a fixed death benefit. It's a fixed premium. It's the simplest, cheapest type of life insurance oftentimes to buy. And that's why a lot of younger people will oftentimes purchase term life insurance as a huge part of their life insurance portfolio. I'll tell you personally, I bought a lot of life insurance over the years. I bought a bunch when I was 30, right around age 30, and then I bought a bunch more when I turned 40. And the vast majority of it is term life insurance. I don't mind sharing with you guys, I have close to $8 million worth of life insurance on myself currently. It started out in my late 20s realizing that I had this need. And I kind of did a calculation, which we'll talk a little bit about in a couple of minutes, to figure out what was my number and how much life insurance did I really need to make sure that if I didn't come home tomorrow, everything that I wanted to have happen was going to happen and it was going to be funded. That was kind of the idea that I had. So I bought a bunch of life insurance at age 30. By the time I hit 40, my income had another 10 years worth of growth in my income. Things were moving well, you know, within the business. And I began to realize I did not have enough life insurance. And so I added more at 40. I'll tell you, I'm 48 today. In hindsight being 2020, I should have bought more life insurance at 30, right? Dallas Richens, our life insurance guru, he has a saying, and what's the saying? Get as much as you can, as young as you can. And he's talking about life insurance specifically. I know that could probably be applied in a variety of things, but life insurance specifically, you know, people, if you talking to younger folks, I'm talking to people in their 20s and 30s, if you're older than that or not, I think it's really important to impress on them and help them understand the need for the life insurance and getting it locked in at a much younger age. I pay a lot more per thousand for the life insurance that I bought at 40 versus what I paid at actually at 30. So, and I have both of them in place now. I've structured my life insurance so that I have this large amount of term and a small amount of permanent. And my idea is that I need to cover primarily my income during my prime wage earning years, right? And for me, I'm kind of looking at that as, you know, 40 to say 65. When I hit my mid 60s, a lot of my term life insurance begins to fall away. What I mean is it's hitting the end of the 20 or 25 or 30-year term that I had put it on, and it will be done at that point. I won't have any cash value. That's one thing with term life insurance is you don't have a cash value that you can pull out of it. You don't have living benefits oftentimes with a straight term policy. The most pure type of term insurance is just a fixed death benefit for a fixed amount of time. The way I structured mine is that will fall away in my mid 60s because I'll be past, you know, owing a mortgage. I'll be past paying for college and for weddings and all those expenses that we have in our 40s and 50s and maybe early 60s. And hopefully I'll be way out of the red and in the black, and I won't need this monster amount of life insurance any longer once I hit my mid 60s. I also then have a permanent policy. And I think oftentimes for clients that we serve, the right tool is to have a combination of life insurance policies to do different things, right? So I have this monster amount of term life insurance, and then I have a much smaller amount of permanent life insurance. And the permanent life insurance is locked in for the rest of my life. It goes forever. That's the idea of it being permanent. Now, mine, I have a whole life policy and I have a universal life policy. Those are two types of term or of permanent life insurance, and I have both of them. But my thought is once that term insurance falls away in my mid 60s, I still have about $250,000 death benefit that is locked in for the rest of my life. So that when I do eventually pass, even if it's past age 65, there will be a chunk of money that comes to my wife or my heirs completely tax free. I'll tell you, that's one of the things that I think we have to remember with life insurance, especially when we're helping clients understand how to leverage it as a tool in their portfolio, is that the proceeds from a life insurance policy in most situations are paid out to the beneficiary completely tax free. It's a way to pass money to your heirs completely tax free. And I will tell you, the uber wealthy in this country or in the world, many of them leverage life insurance at a high level to be able to pass wealth to the next generation completely tax free. If I have $1 million sitting in an investment account or a Fidelity account or a Vanguard account, and I die and that money gets passed to my heirs, there's a huge taxable consequence to that, right? If I had that same money sitting inside of say, a permanent life insurance policy, that money would get passed, that death benefit would get passed to them completely tax free. So that's something else to really, think about and consider. Going back to the term life insurance, we have several different versions that we're going to outline today. We have straight term, which is just a very basic, it's a death benefit locked in for a specific time frame. We also have term policies with living benefits. We have several carriers that I think stand head and shoulders above the others. Living benefits are products where there might be a rider on the policy or it might be baked into the policy where that client can use that life insurance or tap into a portion or all of that death benefit before they die if something else happens. Maybe a chronic illness, a critical illness, a terminal illness. There's ways that they can access a portion of that death benefit before they die if they need to get their hands on cash. So that's kind of an enhanced version of term insurance. And then the other type of insurance is permanent. And I've alluded to it a little bit, but there are different types. There's whole life, there's universal life, there's hybrid products. There's different things that we'll talk about over the next couple of weeks that are on that permanent life insurance chassis. Now, permanent life insurance is awesome because it's locked in for the rest of your life. It also oftentimes will have a cash value inside of it that will build and roll and accumulate over time that you or your client can actually leverage in a variety of ways. You can pull money out. You can take, withdrawals tax-free out of that if that's how the policy is built. You can take loans against the cash value at a 1 or 1.5% interest rate. There's a whole school of thought around becoming your own banker and building up cash value inside of a permanent life insurance policy so that if and when you need money, you need to buy a car, you need to put a down payment on something, you can go to your life insurance and borrow at a very low interest rate without having to go to banks. There's a whole strategy around that. So permanent life insurance can do a lot of different things. It's a lot more flexible. It's a lot more versatile. It lasts longer because it's oftentimes built on a permanent chassis, but it's also more expensive per thousand of coverage. For someone to buy $2, $3, $4, $5 million of permanent life insurance, the premiums would be in the stratosphere. And some people do that. There are many situations from a financial planning or a wealth management or a succession planning perspective that buying a monster amount of permanent life insurance makes sense. But I'd say for most of the clients that we end up serving, I think a combination, starting with really filling the need with the amount of term that they need, and then leveraging, permanent maybe alongside that. Another form of permanent life insurance, which we'll get into next week, is hybrid products. So there are products out there that are a combination of life insurance and long-term care insurance smashed together. They're called a hybrid product. And you can have a death benefit if you die, or if you need to cover expenses related to long-term care, like nursing home, assisted living, in-home healthcare, you can access the death benefit before you die to pay for some of those expenses. So that's another form of permanent life insurance. The last form of permanent life insurance that I just want to comment on is something called final expense. And I will say final expense insurance is probably one of the biggest boats that we're missing as a team. Um, our team is one of the top teams selling Medicare in the nation. And yet, final expense is being bought by many, many seniors, final expense life insurance products. And we're not at the top of the food chain when it comes to sales around that. So that's something we want to spend a little bit of time on as well. Final expense life insurance is super simple. It's permanent life insurance, typically doesn't have much of a cash value, but it's a locked in premium for the rest of a client's life. And it's really just designed to clean up the mess. So typically people are buying, final expense life insurance policies for anywhere from $5,000 to $25,000. And they're just saying, hey, I want to have a 10, 15, $20,000 lump sum tax-free cash infusion when I die to clean up the mess, pay for burial, cremation, funeral, maybe pay off some medical debt or personal debt, whatever it might be. They just want something to clean up the mess. And many people will buy those policies later in life after the term policy that they bought in their 20s or 30s expires, right? They'll run that until they hit their mid 60s. And then around the time they're going into Medicare is when they oftentimes do have other life insurance policies that are beginning to fall away. And so talking about final expense becomes a really, really important part of, progressing that conversation with the clients that we serve. So that's kind of a high level overview. Cav, is there anything else? I want to touch on the dime and getting their number before I kind of pivot over to you, but specific to the different types of life insurance, is there anything that I missed there or anybody else who's on the call, that has something to add?
I don't think so. I don't think so. I mean, we've got the regular, the living benefits, which I think we can probably take advantage of. And I agree with you about the final expense. I think we're missing the boat on that, especially in the Medicare. Transamerica, their new final expense, their underwriting's amazing. The app's amazing. And also, Securian has a final expense plan. It's called Secure Legacy, where people can put in a one-time lump sum and it literally doubles the death benefit compared, and there's no tax consequences. So I'll touch on that a little bit later too. There's some very unique, and I think, and just kind of piggybacking off last week, I think the reason we struggle selling life insurance is trying to sell life insurance like everybody else, and we're not life insurance agents. So if we can find unique products that we can bring up to people that they've really never before, it really bridges that gap to transition to life insurance without basically thinking it's a bait and switch and stuff like that. So that's what we're going to kind of focus on today is some of the unique products that we offer that people are receptive to looking at, without just doing the traditional, hey, do you feel you got enough life insurance? I mean, stuff like that.
Good. Hey, Cav, just FYI, you were a little sketchy on your internet connection, so I don't know where you're at in your house, if there's a way to get closer to your router. I could hear you, but it was fading in and out a little bit and jumping a little bit.
Okay.
Before we pivot and talk specific product, I think one of the things that we have to be very comfortable doing with the clients that we serve is making sure that they know and they help you identify what their number is. How much life insurance does someone really need? And I think before you start trying to design packages and figure out whether it's term or perm or final expense that you're going to use as a solution, you got to figure out what their number is, right? And when I think about what my number is, it's okay, if I don't come home tomorrow, how much money do I want to have dumped into my family's lap to make sure that all the dreams that I have for them happen? What does that look like? And so one of the things I think you can do to engage in this conversation with your clients is just ask clients, do you have life insurance? I mean, there's a lot of great questions. Is it enough life insurance if you have some? Is it the old kind or the new kind? We'll kind of talk through some of these techniques. But I like to ask a lot of my clients, has anyone ever done a life insurance needs analysis for you? And most people will say, no, nobody's ever taken the time to do that. And so my response is, well, I have a very simple process that we can do in a couple of minutes to help understand how much life insurance you actually need. And it's a part of our Fact Finder tool, and it's utilizing an acronym which is DIME, DIME. And so I just like to take clients through this. I need to do a better job of making sure that I do this with every client personally. So I'm reinforcing to myself a lot of the things that I used to do that maybe I haven't been great at the last couple of weeks or months here. But the idea with this needs analysis and this DIME technique is to take the D, and the D actually stands for debt. So what kind of debt other than your mortgage are you carrying? Do you have student loans? Do you have vehicle loans? Do you have credit card loans? Do you have personal debt? Do you have other types of, debt? That's what the D stands for, is DEBT, debt. And really trying to get that client to give you a firm number on, okay, so how much debt? If you don't come home tomorrow, how much debt do you need to wipe out? And this doesn't have to be exact, right? I mean, I like to get within $10,000 of what the number actually is. They say, well, it's about 100,000. Okay, 100,000 goes in next to the D. The next one is I, so DI. I stands for income replacement. And this is the big one, guys, because when you start thinking about it, if you don't come home tomorrow, how many years worth of your income do you want to replace? And does there need to be an inflationary component to that? Would you expect your income to go up year over year? That's what kind of blew my numbers out of the water, honestly, at 30, is I made some projections at 30. Fortunately, by 40, I had far outpaced what my projections were from an income perspective. You can do that in this business if you haven't figured that out yet. But that caused my numbers to be off. And so you start thinking about, how many years worth of income do I want to replace? Is it 1 year? Is it 5 years? Is it 15 years? If I'm talking to somebody with children, I'll tell them what I did. I'll say, when I built my life insurance portfolio, I wanted to replace my income with an inflationary component to it up until my youngest child was about 20. So many of the clients that we're talking to, if they have a 5-year-old child, they're looking at 15 years worth of income replacement. And how much do they make? $100,000 a year right now. Easy math. So 100,000 times 15. What are we looking at? 1.5 million right there just on income replacement. And then you add an inflationary component to it. I don't think it's insane to think that somebody just to replace their income would need $2 million. So I think you got to work with the client, though. When you're asking them the questions and they're answering this and you're just guiding the conversation, they're building out what their number is instead of you telling them what their number is. So that's a really important piece of this process. So that income replacement. Next is M, which is your mortgage. How much do you owe on your mortgage? And if you don't come home tomorrow, do you want to pay it off, or do you want to leave your spouse, with that? You don't have to put anything in any of these spots, but M is mortgage. And then E is the last one. And I ask two things on E. I ask end of life and education. So end of life is like, how much money do you want to have available through life insurance to clean up the mess when you die? It takes minimum of $10,000 to $12,000 to bury somebody today. It's an expensive thing when someone passes away. And so do you have a way of paying for that? Is money already set aside for that? Or do you want to build that into life insurance? And then the last one is education. And that's more if you have children. If you don't come home tomorrow, would you like to help your children pay for their education, like college and things? You don't have to. You could just put a little bit towards it. I'll tell you, $1 million of my life insurance was built towards making sure that if I wasn't here, my 3 kids had plenty of money, almost $350,000 a piece, to go to college if that's what they wanted to do. I didn't want to make the fact that I wasn't here deplete their ability and my desire to pay for their college. That was important to me. It's not important to everybody, but that's another thing that I think you've got to think through. And so just taking somebody through this DIME, D-I-M-E, debt, income replacement, mortgage, end of life, or education replacement. Just kind of thinking through that and doing the math for people so that you come up with their number. What you will find when you do that is that most people have far less life insurance than they actually need on paper. And it develops an opportunity to talk about bridging that gap. Most people, their perception of what they need in life insurance is far less than what actual reality is. And if they come back with, well, I don't need 2 or 3 million or whatever the number is, okay, what do you want to not fund if you're not here tomorrow? Like, let's back something out then. Maybe you only need 1 million, but that's going to change the trajectory of where your family's headed if you're not here tomorrow, right? And understanding that. So I think everything starts with that needs analysis. And then once you know what that number is, now you can start having a conversation about, okay, what would it look like if we did a 20-year term of all of this in this $2 million need on a 20-year term or a 10-year term? Start looking at some price points to see if it's even within the budget of what they can afford. Oftentimes what I'll do is once somebody gets approved for their term life insurance, then we'll pivot over because they've been approved. They've done oftentimes a paramedical exam, and we can start talking about permanent life insurance solutions to pull in alongside that term life insurance. But it all starts with trying to figure out, what their number is. I'd also say as Cav mentioned, there's a number of products in our portfolio that can be used for a variety of things other than life insurance, especially products that have a living benefit included with it. And so it's just another way to kind of leverage the portfolio. I'm going to talk about one product specifically or one series of products, and then I'm going to kind of turn it over to Cav to walk through a lot of the other products with the time we have here today. The first product, though, and the simplest thing that you should understand and get acquainted with if you're not, is Ethos. Ethos is one of the simplest platforms to sell and buy life insurance that I've ever seen. Ethos is a third-party platform that came into the health markets ecosystem probably 2 to 3 years ago, and it's gotten way better since it first. Ethos is not actually a life insurance company; they're a technology company, and you'll see them advertised on TV. I hear them on the radio all the time on XM radio advertising. They are really positioning themselves as the simplest way to buy life insurance because with their platform, basically a client can click on a link that you provide for them. They can complete an online application and have a policy issued and in force in less than 10 minutes. They use digital underwriting. So it's all virtual. They don't have to do paramedical exams. They don't have to pee in a cup. They don't have to do blood draws. They don't have to do any of that kind of stuff. They just use Ethos Pulse data points to be able to underwrite, and they will make different offers. Now, if somebody's really sick, they may not qualify for $2 million of life insurance, but they will be offered something. Regardless of somebody's health situation, current or past, if you go through Ethos, they will be offered something. Now, it might be at a cost they're not willing to pay because of past medical history and everything that Ethos is pulling in, but they will be offered something. So I think it's a wonderful way to start with clients. I think if you're going to learn one product, it's the most versatile thing that we have because it's like a digitized system to let your client go through and get approved or disapproved. They can pay it. They can have it enforced inside of 10 minutes. I'm going to share just a couple of things with you very quickly. I'm actually on our Territory Ethos website here. And there's a couple of things I wanted to point out on this website. First of all, I'm going to click on the home screen and I'm going to scroll down because I wanted to give some people some kudos. Each time one of you on our team makes a sale or gets appointed, I get a little notice on here. And so I see that Seth recently activated his first policy 5 days ago. Duke, if you're on the call, congratulations. I think this was your first life insurance policy through Ethos 5 days ago. Charlie has joined the agency. Looks like Casey's joined the agency. So as you're getting appointed, it's actually notifying me here. Sherry's now appointed. Tony Letcher activated his first policy through Ethos here about 12 days ago. We had Frank, Mary Martin, Michelle, Mo, all of you within the last 21 days activated policies. So Ashley and Tracy, I see that you've joined. Ray Plegans, one of the top agents on our team, activated his first policy within the last month here. Mike Boverhoff, Maggie, I see you on here, activated your first policy. So really great to see what's going on here. I see Sam's joined us. Jill activated a policy. So we've got a lot of different cool things happening on within our agency on this site. One of the things I want to point at you to though is right from the main screen here. This up here is our share button. And if you click on share, what it actually does is it brings you in to the Ethos platform where you can share or open your website. And they have already built out a link that you can email to a client. And there's a QR code that's built specifically for you to send to a client. So they can actually just click on the link that you send them. They can scan the QR code. It immediately takes them into the process of filling out an application and getting approved for a life insurance policy. The simplest thing you can do. if you're not at least sending this to every client on the back end of your conversations, I think that's a really, really great place to start with this. So I'd encourage you guys to go in and play with it. Go in and complete an application on yourself. You don't have to buy it, but go in and do an application on yourself just to kind of get the look and feel of what this actually looks like. Something else I wanted to point out to you is down here under resources. If you click on resources, there's a lot of different resources that you can learn about. But one of them that I wanted to point out is the ready to use templates. And they have both email templates and text messaging templates that are already approved for use, and you can just use them as you see fit. Obviously, you can load these into your CRM. You can send them out through various platforms that you might use. But there's a lot of different. Here's one for cross-selling to existing clients. Here's one that's more mortgage focused. Here's one for follow-up after an appointment. Follow up with leads that don't convert. There's just a lot of different options that are on here that you guys can begin to use and leverage for both email templates and text templates. So I'd say above everything else, learn Ethos. That should be one thing that should absolutely be one of the products in your portfolio. And then the rest of the products that we're going to talk about today, are additional options that can be added or that you can use. So I think the next thing, Cav, we'd like to talk about is the UH1 product. UH1 has what's called a simplified term product. And so, Cav, I'm going to stop sharing here, and I'm going to give you the ability to share and let you take a little bit of time to move through some of the other products that you wanted to talk about today.
Okay. Can everybody see my screen okay?
Yep, we can.
All right. So, again, like I talked about the last couple of weeks, I think the very first life insurance product everyone needs to grasp is the United Healthcare Term Life Safeguard. And the reason I think we should do this is for a couple reasons. First of all, it is a living benefits plan, so we can actually use it as a critical illness product. This is a strategy that I've been using for many, many years. Even when I had my own sales team, we had a product called Life Plus, and we would sell this in conjunction with a critical illness plan. But the other reason why I think this is a great product is if you're ever meeting with someone who's single, has no dependents, this is probably the best life insurance plan for those people. So, but when you talk about this, the biggest thing that I tell people to focus on with this is, especially if you're going to use this as a critical illness package, don't focus on the life insurance aspect of it. Focus on the living benefits. And basically, these are plans that are designed that can help if people, get heart attack, cancer, stroke. There's some other things, but time away from work, childcare, household expenses, transportation. And really, all you need to do is show these people to where the way that I like to present it is I would just focus on the critical illness where we can do 15, 25, or 50,000. And it's just one of those things where if I'm showing this as a critical illness product, it's like if you get cancer and you can't work for a month or two, would 15, 25, or 50,000 help pay your bills? Now, I don't really focus on the life insurance aspect of it, but if they do ask about it and they'll say something like, well, I already have life insurance, just say, good. If something happens and you pass away, use this life insurance to clean up any medical debt, and let your family live on the rest. The emphasis is, and I just watched a webinar yesterday from Mutual of Omaha. And again, more and more people, because of advancements in medical technology, you have a better chance of having a heart attack, cancer, stroke, and not dying than dying. And so using this product as a critical illness plan will help you start building up your life insurance. But as we've talked about the last couple of weeks, the commission on this is about 20 points higher than a critical illness plan. And so this is something that I would, and I think I mentioned this last week when Dan Garrison came in a couple weeks ago to the tier 3, tier 4 meeting. he told me that most of the top life insurance agents in our nationwide, they start with a living benefit plan and they sell it as a critical illness. So I think it's a strategy that we need to really start adapting to, because it's just going to help you make money. It gives people more bang for their buck, because there is a life insurance component, there's a living benefit component. And so they're even though it may be a little bit more in premium than a critical illness plan, it should cost more because it's doing more for them. So that's the first life insurance plan that I think everybody should learn how to do it. Again, the two biggest reasons why is you can use it as a critical illness plan. And second of all, this is the perfect life insurance plan for a single person who doesn't think they need life insurance. So, any questions or anything you want to add, Silas, before I move to the next plan?
I would just say this is probably the simplest term plan with a living benefit of some sort that we have in our portfolio. It's a
Yep.
10 or a 20-year policy. It's simplified issue. So they don't have to pee in a cup. They don't have to give blood. They don't have to go through a paramedical exam. It's going to be based on the information they fill out on the application. And they might do a little bit of, I don't know if they pull an MIB, but a little bit of data, back end data on it. So it is simple. So I think getting started, this is a wonderful product to begin including. One of the things Kevin and I talked about a little bit earlier this week is that, our process really from forever has been, we use health insurance to get in the door. We help the client self-identify needs that they didn't have, which include supplemental insurance and life insurance. I think life insurance can be sold in the same setting that you're selling health insurance, Medicare. Well, you can't do Medicare and life insurance together, but health insurance, supplemental insurance, and life insurance can all be a part of that total solution. And this is probably a great place to start along with Ethos. So,
Yep.
What you got next?
All right. So the next one is kind of a step up from the Safeguard, and that's Mutual of Omaha's Term Life Express. Now, the nice thing about this Term Life Express is it is a term life insurance plan. It is simplified issue, but this has embedded income protection in there as well. So when we look at this, there's a couple things I want to point out. The first thing I want to point out is it does have living benefits included in there. And so literally with this plan, there's really 4 or 5 ways that it can actually pay. So obviously it's a life insurance. So if someone dies unexpectedly, there's a death benefit. The second thing is it has these living benefit riders where there's a terminal illness rider, there's a chronic illness rider, which is I can't do 2 of the 6 daily activities. There's a critical illness rider where if they have heart attack, cancer, stroke, it'll pay. But there's also another feature that I just learned yesterday, and you can actually add a disability income rider on this plan for 18 to 30 months, up to 1,500. I know this says 3,000, but they bumped it back down to 1,500. And the whole approach to it is you can add this rider on the plan, and it's basically designed to be mortgage protection. So if someone becomes disabled for anything, you can actually get up anywhere from, I think, 250 up to 1,500. And the whole pitch is if you become disabled and can't work, this will give you money for your mortgage payment for 18 to 30 months. And it doesn't add that much to the premium. So I'm going to start incorporating that in. But the biggest thing I want to focus on, guys, is how the living benefit plans work. And so when we look at this, like I said, with this plan, there's basically 4 scenarios in which it'll pay. The first scenario is if someone dies unexpectedly, it'll provide the beneficiary $100,000 in income. Oops, I didn't want to do that. I want to do this. Okay. So it's $100,000 death benefit. The second thing is if they get diagnosed with a terminal illness, which is again affect people's ability to work, they can get, in this particular example, it's almost almost $76,000, because again, when we think about this, if someone cannot work, if they have a terminal illness, it's going to affect their income. So this is a product where they can get some money while they're alive to help deal with whatever's going on. The third scenario is if I have a chronic illness, which again, a chronic illness is I can't do 2 of the 6 daily activities like feed myself, bathe myself. And that, again, what they're going to do is they're going to do what's called a life expectancy evaluation, and they're going to determine how much time this condition is going to take off their life. And so if it's like a 15-year life expectancy, they can accelerate up to 80%. There's going to be some actuarial adjustments, but they basically could get a cash offer of $34,000. An 8-year life expectancy would be 60,000. A 3-year life expectancy would be 65,000. So literally with this plan, as you're looking at with this $100,000 benefit, if I get diagnosed with a chronic illness or a critical illness, I could get somewhere between $30,000 to $60,000 depending on the severity of it. So this is kind of a step up from the term life safeguard, because the safeguard is going to pay you a fixed amount, 15, 25, 50,000. This is actually has a range of what it could pay, and it's going to be based on how severe it is. But the thing about this, guys, is this is when you're talking to people about this plan, it's all about replacing income, which if we go back to what we talked about last week, what we're trying to do is reduce people's chance of medical bankruptcy. And so this is a product that's kind of a step up from the safeguard. This is the product most people are selling nationally as their income replace or their living benefit plan. Because again, it's simplified issue. Transamerica has a living benefit plan, but they've kind of bumped up that they basically don't want to deal with anything unless it's 250,000 or above. Where this, I can still do 100,000 and sell it as an income replacement. And then again, having that ability to throw a disability rider on there so that people can get up to $1,500 to pay their mortgage, that's a pretty attractive product. So Silas, any questions or anything you want to add to this? This is a little bit higher level than the other one. That's why we want you to start with the safeguard first. But when you get used to talking about this, life insurance as a critical illness, this is a product that you may want to eventually go up to, because this is the highest commission product we have of any term life plan. Or it's like 108%. I think for a tier 1, it's almost 77% commission. So it's a pretty cool product.
And I would say a big piece of this for all of you is you have to be a student of your business. Cav has gone through these product brochures. He's figured out how to highlight in Adobe Acrobat, which I can't ever figure out. I sent it to Cav. Adobe, but he's poured through the product brochures, which are all available to you. They're either available to you through Quote Connect, if the product is on Quote Connect, or they're available to you through the Resource Center by clicking on the carrier tabs and going deeper into each carrier page. So we all have these tools at our fingertips. It's just a matter of studying the product brochures and making sure that you understand them. So I'd encourage you all on that. One thing I want to mention too on Quote Connect. So not all of our life insurance products are available for quoting on Quote Connect. What you're typically going to find on Quote Connect is our term products, most of our term products, and our final expense products. So you start getting into higher level permanent life insurance, universal life, whole life, hybrid products. Those are not going to be available for quoting because it's a more complex quoting platform that's needed. That we have to do those at the carrier level. So just wanted to quickly reference that. If you go into Quote Connect, you won't see everything in our product portfolio.
Yeah, and one of the things I want to add. Yeah, one of the things I want to add to that is if you sell life insurance just using Quote Connect, I think you're missing the point, especially with some of these higher level products, because when you go to the actual carrier sites and you can print out a proposal, a lot of these proposals will actually sell the product itself. Now, for example, for this living benefit plans, you don't really need that because they have these nice brochures. But if you're ever selling, some of the stuff we're going to talk about, get used to doing everything at the carrier site because their proposals are much better, especially next week when we start talking about hybrid products and stuff. You just giving someone a number doesn't do anything, but if they can see how these plans work, that's the best thing. Which takes me to the next thing I just want to touch on is, again, I just want to do a reminder of what we talked about last week, and that is that Transamerica has a plan where you can add what's called the income protection option on it. And this is one of the things that gets me talking to people about life insurance because of how this can be designed to pay for different things. And the biggest thing is taking their death benefit and spreading it out over time. That is a very unique benefit that a lot of beneficiaries would like because, again, if a primary breadwinner passes away, the ability to get a paycheck instead of a big lump sum, that's very attractive to people. So that's why I like when I talk about, do you have the old type or the new type, I'm always talking about this income protection option where they can spread their payment out over time. Couple other things I just want to touch on. Again, last week we talked about this a little bit, but Mutual of Omaha, they have a children's whole life insurance plan. Again, the big thing we talked about this is this guaranteed insurability rider, where if they get something happens to their health, to the kid's health, they can get more life insurance down the road. But here's the biggest reason why I like this plan is in their brochure, it's got the rates right there. So I don't have to pull out my computer. I don't have to go to different sites. I can just quickly show this to people and get them to commit to a plan right away. And then you can just do this right through iPipeline. And the other nice thing I like about this is, again, it is the highest commission product we have for children's life insurance. Another thing I want to touch on is the new Transamerica Final Express solution. You won't find this on Quote Connect yet, guys, but we touched on this a little bit last week, and I showed you that they actually have a pre-qualification section where you can go through, ask some basic health questions, and it'll actually tell you what to quote these people at. So you can literally quote them at the right level based health. And then it's an electronic application that's instant approval. I just did one of these last Wednesday. It took about 15 minutes. And when I walked out of the door, they already had a policy number. So this is a very cool plan. It's not on Quote Connect yet. So if you look at Quote Connect and look at Transamerica, those are their older final expense. This one, you actually have to go to the Transamerica site. But again, the nice thing about this is it's very competitive price-wise. It's very easy, simplified issue underwriting, but they have a unique feature built into this. And what it's called is basically it's called Everest Funeral Concierge Service, where this will actually help people do all the things necessary, because most people, when someone passes away, they have no idea what to do. And so this is something that's just built into this plan. These types of products are becoming more and more popular in a lot of companies. I think Ethos has something built in their plans as well, where they have this kind of funeral concierge service built right into the plan. So these things are pretty neat. It kind of helps people walk through this. So that's another nice thing about this product. Now, in the few moments we have left, I just want to touch on one other whole life plan. It's through Securian, and it's called Security. And this is designed, if any of you have ever talked to people, especially a little bit older, where they say, you know what, I've already got my funeral paid for, or I don't really need final expense insurance. We've got enough money in the bank. Or it's just someone who wants to leave something to their kids and they have some assets that are just laying around. This is a very unique product. And basically what it is, it's a single premium plan that they can drop in money and it's going to do some different things. So here's an example of a 60-year-old who had 50,000 in unused assets available for legacy planning. And so one example they get is he could take that 50,000, put it in a deferred annuity, earning 4% per year. So over a 20-year period, that 50,000 turns into 109,000. But when John passes away at age 80, he actually has to pay 19,000 in income taxes, so that 109,000 his heirs got 89. Where with this secure whole legacy, if he would have put that 50,000 right in the policy, it immediately becomes 110,000 in death benefit. And then when he passes away at age 80, his heirs get 110,000. So again, it's just a situation to where you literally take this premium, and it can be 10,000. I just did one for a lady the other day. She's like, what if I just drop in 10,000? It instantly became 18,000. So instead of her kids getting 5,000 each, they're going to get 9,000 each. And so that's just a thing where if someone has some money that's laying around, like Silas, he can just pop a bunch of money in there and his kids will get more money. So this is called Secure Legacy. Again, this is a little higher level thing. This is not for the everyday person. The everyday person for final expense would probably be Transamerica. But if you've got someone who just basically has some idle money, this is a great way to do it. And then the neat thing about this plan also is there is a return of premium guarantee, because if they ever decide to surrender their policy, they're going to get 100% of their premiums back. There's a terminal illness benefit, or they can do a policy loan on this. So it's still their money. It's just instead of sitting in an IRA or sitting in an annuity or just sitting in a CD, they can move it over here, instantly double, in a lot of cases, double their money. And then it's there if they need it. So that's about all I wanted to show, Silas. These are just some of the unique products that we have that we can help people with. So what do you have to add to this?
I don't think I have a lot to add. I think some of this is um, hopefully just clearing away some of the clutter in your mind and helping you to focus on which life insurance products you should be reading about and being a student of. I think our product portfolio when it comes to life insurance is pretty massive. There's a lot there, which is wonderful on one hand. On the other hand, it can be overwhelming and confusing trying to figure out what to do for a client, right? So I think there's really two different things techniques that we talked about today. One is, helping a client understand what their number is when it comes to the amount of life insurance that they need. The other one is using some of these products that are built on a life insurance chassis, but more specifically for critical illness, chronic conditions, um, terminal illnesses to get clients infusion while they're alive, leveraging those living benefits. So there's a lot of different ways you can incorporate. And candidly, you may have clients. I have clients who have term life insurance, permanent life insurance, and some sort of living benefit. I have that myself. Actually, a portion of my term life insurance is straight term. A portion of it is term with living benefits. And then I have permanent life insurance, separate from that. I don't think it's crazy for a client to think about buying, a straight term policy, a term policy with living benefits, and then a final expense policy to make sure something's there no matter what happens or how long they actually live. So sometimes a combination of these products is the right solution for the consumer as well. So we just want to continue to talk about these things. I think, for all of you, I would just reiterate, life insurance is the highest commission product we have in our portfolio. And it's something where most people are grossly underinsured, and we're already in front of them. So I would encourage all of you to, go back and look at your process, look at your protection for life, make sure that you're incorporating that life insurance conversation. How are you asking the questions through the fact-finding process? Those are all things that I think you can critically evaluate to try to get better and better at selling more life insurance. So this is a wonderful time of year to do it. And I think, we've talked over the last couple of weeks about policy reviews and, those types of processes that we implement this time of year, outside of the annual enrollment, open enrollment, as a follow-up to the work that we did then. I think figuring out how to engage in some of these other conversations around life insurance. Next week, we're going to talk about long-term care insurance and disability insurance. These are all natural progressions of the conversation and part of building a relationship with the consumers that we serve and not just being transactional. I listened to Cliff Carthauser's talk from last week. I hope a lot of you jumped on that. It was one of the best ones that Cliff has done, my opinion. I'll probably be sending out the recording because I think it was that good, but I'd encourage you to listen to it. And one of the things that he really focused on in that is having a process, taking a client through a process that's an exceptional process, so they will refer business to you. So it's not transactional, so they continue to do business with you long term. And I think, this whole life insurance conversation is certainly a piece of building that long-term relationship with the clients. So that's all I've got for today, guys. I know we're up against the top of the hour. I appreciate your attention to detail today. We'll send this recording out so that you can kind of go back through it with a fine-tooth comb and make sure that you're focusing on some of the products that we've talked about. If you have questions, don't hesitate to reach out to Sandra, Cav, myself, or your sales leader. We're certainly happy to support you in whatever ways we can. Appreciate you being here. Go make it a great week and see if you can sell a life insurance policy before the week's done. Take care, everybody. See ya.